Hello and welcome to our session today. I'm Connie Hulme and I'm Head of Finance at Fitwise Management Limited. I'm joined today by Kenny McDowell. Kenny is a partner at Saffery Champness and he has over 25 years of experience working with charities and in the not-for-profit sector. Kenny works closely with us on a number of our charity and association clients. In today's session, we're going to look at risk, governance and annual reporting hints and tips for the modern charity. We've chosen three main questions to address, and we hope this will provide useful guidance to association and charity trustees, particularly in light of the current climate. Kenny, I was hoping you'd be able to explain to us how you've seen risk management develop in the sector and also how this has changed as a result of the current climate.
Okay, well, first of all, a big thank you, Connie, for this opportunity to speak to you and your delegates this afternoon. Thank you to Fitwise, obviously, as well for this opportunity. So the first question, I guess, in terms of risk management and what's essentially happening in the sector as we sit, there's quite a lot happening for obvious reasons. So we step back and look at risk management as a principle. Risk management is omnipresent when you're looking at the running of a modern and well-functioning charity. It's also very much enshrined within trustees' duties in general. Now, I'm a trustee myself as well as an auditor and professional advisor, so I know exactly what it feels like to be around the trustee table when considering risk management. And risk management really needs to be a dynamic and an alive topic to make sure that it's properly functioning within the governance of the charity. In terms of looking at governance, you'll see in my second bullet point there that risk management as a behaviour is very much a staple. And what I mean by that is it's an expected discipline within functioning boards. And governance, I guess, is very much prominent in today's environment, not least because of the developments with COVID. So when we're looking at governance, risk management is very much front and centre. And risk management at the minute is obviously dominated by recent events. When looking at behaviours, we're obviously talking about trustees' duties. We're looking at the staple aspect of good governance. But there's also the annual reporting aspects of risk management as well. And you'll see that I've got the third bullet point there, which is looking at the strategic report requirements for those entities out there that are perhaps in the company arena. But regardless of whether you're in the company arena or not, you do have a duty each year as a trustee to essentially report annually within your statements that you are aware, first of all, of the importance of risk management. Secondly, that you have identified the key risks that the charity faces. Thirdly, and perhaps most importantly, that you are satisfied that you have the necessary controls in place to address the key risks that you are facing. Now, risk management, to allow you to do that as a board, there's quite a few risk management tools that are available. And one I refer to quite a lot when I'm sitting on boards and trying to give them something that they can helpfully work with. Charity Commission template that looks at risk management and the types of risks that a charity should be addressing as part of its operational behaviour. This would be a whole range of things from reputation, governing document compliance, to law and regulation, to financial risks, to the whole range of categories, if you like. And I would recommend that tool to you, and it's freely available, obviously, on the Charity Commission website as something that boards, if they don't have a tool, can jump to and can start to populate and make this an alive aspect of their behaviour. Jumping into the fourth bullet point here, we're obviously looking at COVID-19, and has been dominated in the year by the pandemic. There's absolutely no doubt about that. And I guess whilst COVID-19 can feature as a headline risk and management thereof is important, what I'm seeing in my professional world is that COVID-19 is the headline, but there's lots of sub-risks that be managed in connection with what COVID-19 presents, depending on the circumstances of the charity. Clearly, using one example, if you're in the arts space at the minute, perhaps in theatre land, you are shut. There's nothing you can do. You're probably running a very skeleton staff. You have nothing going on in the theatre. So what does that mean in terms of the impact of your charity? What does it mean in terms of your activities, both now and into the future? And ultimately, what does it mean to your risk management for the sustainability of your charity? So they're all very key questions. COVID-19 is with us. It's not going away just yet, and it's with us, I would say, for the foreseeable. And the SORP has recognised that. So the SORP is requiring enhanced disclosures when it comes to risk management and the Trustees' annual report. So again, look on the website for the SORP guidance thereon, but it's very clear they're looking for a statement on impact, they're looking for a statement on how you're managing your reserves, and they're looking for a statement particular to this question on risk management. And one final aspect on risk management before I hand back, Connie, this last point is absolutely vital. You can have good tools, you can have great talk, you can have risk management being documented at each trustee meeting. But fundamentally, if you can't demonstrate that you're fixing controls or mitigating controls or operating as designed, then the whole thing falls away. So every time I've got a trustee meeting, I'm always very focused on making sure that they're getting confirmation from their executive that their key risk management controls are operating demonstrably as designed, because only then can you actually demonstrate that your risk is under control. So Connie, I'll hand back on risk management at that point.
Thanks, Connie, and I think that gives a lot of practical examples and things that people can take to add to their conversations just now. If we move on to governance, governance can be viewed as a really complex topic, and I was wondering what you think the best way to approach this area is, and what tools are available to trustees to help them with it as well.
Okay, well, governance is largely extending, if you like, the previous slide. So when I said that risk management was a subset of governance, that's exactly what it is. So governance is a wider landscape entirely. And I put the question as the first bullet point here in terms of what is governance and why is it important? Well, governance to me is the DNA of the organization in terms of how it runs, but also how it feels externally. So it's your systems, your processes, your structure of committees, your board, the structure of your board, and everything that follows. And really it comes into the values of the organization as well. So that's why I think DNA probably sums it up. Now, why is governance important? Well, governance is important because ultimately the majority of not-for-profit organizations in the country are managing funds that have either been donated or provided by state or provided by legacy. So typically it is not your own money, and consequently you need to be able to demonstrate that your stewardship as a trustee is wholly demonstrable at all times. Now, that second bullet point I've put in there, the essential trustee. Now, Charity Commission 3, which is a guidance note, really sets out what it would expect trustees to do as part of essential trustee behaviour. Now, CC3 will tell you something in that this is one of the very early guidance notes, but it's a guidance note that prevails, and in my opinion, it's one that I regularly trot out. And it's a really helpful thing, actually, if you've got an induction pack for new trustees, just to give them a quick sense of what the regulatory structure in the UK expects of trustees and their behaviour. But put simply, the essential trustee needs to act in the interests of the charity. They need to always demonstrate the public benefit. They need to comply with the governing document, and that's obviously relevant to this question in terms of governance. They need to be accountable. They need to manage resources responsibly, and essentially, in summary, need to act with due care and skill. again, in that stewardship role of it not being one's own money. So governance wraps around all of that in terms of how a board of trustees comes together and governs the activities and risks, as we have seen already, of a well-run charity. Now, another thing on Oscar and Charity Commission research that I think is relevant here, Oscar and the Charity Commission quite often do surveys. And the most recent survey, this is quite interesting, the most recent survey on both sides of the border, essentially Oscar and the Commission are coming up with the same conclusion. And that is that trust is built on demonstrable governance. And trust and demonstrable governance equal positive donor behavior. So what's that telling me as a trustee? Well, it's telling me that if I demonstrate good governance, people are well disposed to me as a trustee and as a charity in terms of my objects, because I'm demonstrating with whatever I do on a website or an annual report or other behavioral aspects in terms of how they see us operating, that we are well run, we are responsible, we have your trust. So just looking at that then, in terms of how to demonstrate good governance, there's a couple of codes out, and I do use these and do commend them to my clients. So you've got the Charity Governance Code, which is largely an English and Welsh code that was produced in 2017 and has recently been updated in 2020. And you've also got the Scottish Governance Code for the third sector. Now, the two are largely saying the same things, but I really like the fact that both of them have helpful tools. The Governance Code in England call it a diagnostic tool. So basically, you've got a small charity and a large charity version of the tools, and you can measure yourself as an organization using these tools. And then what they're encouraging you to do, because this is not a legal requirement, but what they are encouraging you to do is to put the conclusions into your trustee annual report each year, really to say where you either apply, i.e. comply with the code, or bits that perhaps you don't. And it says that you should try and explain things on an apply or explain basis. So basically say that you're complying with the following aspects of the code, but you don't comply with these aspects and perhaps explaining why. And that, I think, is a very powerful thing to differentiate oneself in a governance sense compared to your peers. And I guess the larger the charity, the more profound that is, because control becomes a very difficult thing as scale increases. So the governance codes are there, and I think they should be used. The trustee role and charity context, both codes go into that, and both codes make it very clear, as I've said already, that the essential trustee takes this seriously, but also in connection with the charity. Understanding your governance and constitution documents are absolutely vital. And then understanding the behaviors that you would expect to see in a well-run charity in compliance with, for example, these codes. So, it comes at trustee level, it comes at charity level, and then it comes at the macro level in terms of the aspects that they're expecting you to comply with. Now, in the Charity Governance Code, there are 7 principles, and the Scottish one has got 5, but the 7, I think, are helpful because they probably are a bit more comprehensive in terms of the key aspects that they're expecting. So just to run those through as part of this slide, the first one is organizational purpose. So obviously being clear on where the charity is going is what that is saying. The next one is leadership. So having the board in charge of the strategy and a leadership structure that drives the charitable objects, an executive that drives the strategy is what they're really angling at there. Integrity, they're expecting as a given, as well as equality, diversion, and inclusion. So that's the next 2. And then the one that we've looked at already, which is decision-making, risk, and control. So as I've said already, risk management is embedded within good governance. So risk is in that section as well. And then the final 2 is board effectiveness and openness and accountability. So essentially, those are the key 7 ingredients that they're expecting modern, well-run charities to measure themselves against. As I say, there's very helpful tools in the sector to do that. So hopefully, Connie, that gives a sense of my views and experience in terms of governance best practice in the sector as I see it.
Thanks, Kenny. And I think that's helpful hints in terms of as well joining it together with what you need to do, but also wrapping it up in your annual report and feeding it back to people and letting them see how it works. Our last question then is looking at the coming year going forward and what you see as the key matters in the 2020 and 2021 audit cycle, and also the challenges that you think that will start to come up in your discussions with the Board of Trustees around that.
This is a slightly shorter slide because I think some of it we've covered already in the discussion. So I've got here Trustees annual report, and that covers the first two bullet points, and then I've got asset values and going concern. And I guess that's it in a nutshell. The Trustees annual report needs to be comprehensive to comply with the SORP requirements, as I've said already. So there's going to be a whole impact piece in terms of how your activities have been impacted by the pandemic. There's going to be a whole reserves piece as well in terms of how sustainable are you? You know, if you're dipping into reserves, is it reasonable to assume that you'll be able to come out the other side? And future plans in terms of the Trustees annual report this year is going to be really interesting because, to be honest with you, a lot of industries in the third sector might struggle in terms of exactly where it's going and how quickly one can come out of it. And again, Theatreland is a good example of that. I guess another aspect of the Trustees annual report is ultimately why you're there, and it's your beneficiaries. And again, depending on how frontline you are, that will have a very interesting commentary in the year, because it may well be that the demand for your services or charitable activity has never been greater. But is that demand being risk managed in terms of quality of output, but also is it being adequately funded by the usual sources or additional sources, as the case may be? So the whole jigsaw of the Trustees annual report this year vis-a-vis the pandemic is absolutely profound, because the past in many ways is no real indicator of where you currently are and where you're likely to go because of the monumental effect this is having on certain third sector organizations. So it's a really interesting one, but I would expect auditors to be discussing this at the planning, but also obviously helping trustees during the audit process, and obviously at the closure point, making sure everything is as up to date as it can be before approving accounts. The large charities additional reporting requirements is just to remind charities that are not-for-profits that if you are a certain size, i.e. large under the Companies Act, so greater than 36 million turnover and greater than 18 million of gross assets or more than 250 employees, there's more things to do with annual reports. So I'm seeing this more and more in the scale of charity that I get involved in as well. So carbon reporting, employees, stakeholder reporting and supplier stakeholder reporting are becoming much more relevant with Section 172 statements, more going into the strategic report, as I've said already, carbon reporting as well. So depending on your size, that might be part of the audit cycle this year. Certainly if it is, the carbon reporting piece takes a bit of planning for. Just to really finish off then, carrying of value of assets and going concern, in many ways they're linked to a degree. So if you do have assets, I would expect every auditor just to be trying to understand to what extent the pandemic is impairing their economic worth. That may well be that it doesn't, because they're just part of the underlying operations and your business is sustainable. But if it's commercial property, for example, held as an investment, it may well be that you're sitting now without a tenant, for example. So that could indicate impairment, or it could be that you're with regret, struggling to keep going. And it may be that that brings questions as well in terms of carrying value of assets. So that leads nicely then on to the going concern piece, which I would expect to be the key piece in every audit in this particular cycle. And it'll come as no surprise that as trustees and as auditors, you're looking 12 months from the date of approval of financial statements to have reasonable assumptions that you'll still be in business. So again, because of the extent of the pandemic and its uncertainty that it brings, I would expect dialogue from auditor to client this year to be much more engaged, much more forthright, and much more scenario planning based. And just on that, if you're at December year end onwards, there's a new international auditing standard directly linked to going concern. So there's more work to be done from the auditor's perspective, regardless, because of this new standard. So a fairly action-packed cycle this year, Connie, to be honest with you, but hopefully those 3 or 4 points will give the key areas of focus some thought before your planning meeting with your auditor.
Thanks, Kenny. And that's certainly something that we found with working with you the last wee while with our clients. It's the scenario planning, it's the conversations that need to happen within the trustees before they come to the meetings of what's going to happen and how we help them plan forward as well. So really helpful. Thank you. There's just some links there as useful links that Kenny had given as well. Thanks, Kenny. They've both all been informative areas, and we hope that they're beneficial to you and your trustees as well. If there's any questions or you want to discuss these areas any further, then please do get in touch. There'll be contact details supplied at the end of the e-conference that you can contact us. Okay. Thank you very much for joining us today. And thanks, Kenny.
Thank you. Bye-bye.